Hi! Welcome to our video. Today, we're talking about the difference between prepaid insurance and insurance expense and how they were made by grade 12 ABM Barra Accounting to Group 9.
What is prepaid insurance? The term prepaid insurance refers to payments that are made by individuals and businesses to their insurers in advance for insurance services or coverage. Premiums are normally paid a full year in advance, but in some cases, they may cover more than 12 months. When they aren't used up or expired, these payments show up on an insurance company's balance sheet as a current asset.
How prepaid insurance works. A prepaid expense is an expenditure that a business or individual pays for before using it. Prepaid insurance is considered a prepaid expense. When someone purchases prepaid insurance, the contract generally covers a period of time in the future. For instance, many auto insurance companies operate under prepaid schedules, so insured parties pay their full premiums for a 12-month period before the coverage actually starts. This is how an insurance company handles prepaid insurance. As previously stated, premiums or payments are recorded in one accounting period, but the contract does not take effect until a later period. A prepaid expense is recorded as a current asset on the insurance company's balance sheet until it's consumed. This is due to the fact that most prepaid assets are consumed within a few months or being recorded. When the insurance coverage becomes effective, it is transferred from an asset to the expense side of the company's balance sheet. However, insurance coverage is frequently consumed over time. In this case, the balance sheet of the company may show corresponding changes recorded as expenses.
Prepaid insurance is usually considered a current asset as it becomes converted to cash or used within a fairly short time. But if a prepaid expense is not consumed within the year after payment, it becomes a long-term asset, which is not a very common occurrence. The payment of the insurance expense is similar to money in the bank. As that money is used up, it is withdrawn from the account in each month or accounting period.
Let's assume that a company pays an insurance premium of 6,000 on November 20 for the 6-month period of December 1 through May 31. The payment is entered on November 20 with a debit of 6,000 to prepaid insurance and a credit of 6,000 to cash. As of November 30, none of the 6,000 has expired and the entire 6,000 will be reported as prepaid insurance. But that changes once coverage begins. On December 31, an adjusting entry will show a debit insurance expense for 1,000 pesos. The amount that expired or 1/6 of 6,000 and will be credited prepaid insurance for 1,000 pesos. This means that the debit balance in prepaid insurance on December 31 will be 5,000. This translates to 5 months of insurance that has not yet expired times 1,000 per month of 5/6 of the 6,000 insurance premium cost. Since the amount is only 1/6 of 6,000, it will be credited to prepaid insurance for 1,000 pesos.
Insurance policies are usually purchased in advance. Cash is paid up front to cover a future period of protection. Assume a 3-year insurance policy was purchased on January 1, 2021 for 45,000 pesos. By December 31, 2021, 15,000 pesos of insurance coverage would have expired, 1 of 3 years or 1/3 of 45,000 pesos. The following entries would be needed to record the transaction on January 1 and the adjustment on December 31. By December 31, 2021, 15,000 pesos of insurance coverage would have expired, 1 of 3 years or 1/3 of 45,000 pesos. To update the prepaid insurance to reflect the portion that has expired, since 1 of 3 years of 45,000 pesos have expired, 45,000 divided by 3 equals 15,000.
What is insurance expense? It is a fixed and regular expense incurred per period by the insured person. The person who has taken the insurance cover against in any kind of uncertain risk in the future that may occur due to any event, which may or may not be known today. And the same is based on certain percentage of the sum assured, which give an assurance to the insured person. Insurance means an assurance provided by one person to another to make good the loss if incurred. The person providing the assurance is called indemnifier. The person paying the insurance premium is known as an insured person or indemnity holder. Insurance expense means the insurance premium paid by the insured against an assurance that the insurer will make good the loss in the happening in the probable event.
Company needs to pay 2.25% of value of asset as insurance expense on deferred assets. The accounting period is 1st January 2019 to 31 December 2019. The insurance cover starts from March 1, 2019 and end on 29 February 2020. The data is as follows.
Insurance expense is the cost of your insurance that has been used, incurred, and relevant period that has been expired.
Calculations are made on monthly basis as above. The accounting pass for recording the amount paid is.
The main difference between prepaid insurance and insurance expense is that prepaid insurance is an asset account, while insurance expense is an expense account. Prepaid insurance is reported in a balance sheet, while insurance expense is reported in the income statement. Prepaid insurance pertains to the portion of the insurance amount that is not yet incurred or expired as of the financial statement date, while the insurance expense pertains to the portion of the insurance amount incurred or expired for the accounting period. Example: insurance expense is the cost of insurance that has been used, incurred, and relevant period that has been expired. Here are some examples.